Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 1 of March 2026. Oil prices jumped 7% to their highest levels in months on Monday as Iran and Israel stepped up attacks in the Middle East, damaging tankers and disrupting shipments from the key producing region. Brent crude futures shot up to $82.37, the highest since January 2025, in the first futures trading after the US and Israel launched strikes on Iran and killed its supreme leader on Saturday. The Indian rupee is poised for a fall below 91.5 against the US dollar on Monday. Global oil prices and geopolitical tensions are driving this weakening. The Reserve Bank of India is expected to intervene to stabilize the currency. This comes after a period of revival for the rupee in February. Domestic airlines have cancelled around 750 international flights on February 28th and March 1st, with more cancellations expected to be announced over the rest of the week due to airspace restrictions over West Asia, leaving thousands of passengers stranded. The closure of the airspaces is not only expected to impact passengers over the coming weeks, but is expected to significantly affect the finances and international expansion plans of domestic airlines in the first quarter of 2025-26. If we assume an average of 220 seats per flight, even on an extremely conservative estimates, the losses could be around $100 million per week for flights operating in and out of India. India's gold and diamond supplies are at risk. Dubai's airspace closure is disrupting crucial trade routes. This impacts India's position as a major consumer of gold and a leader in diamond polishing. The disruption stems from escalating regional tensions. The situation could lead to shortages of these precious commodities for the nation. Indian garment and textile exporters face significant challenges. The closure of the Strait of Hormuz will force longer shipping routes. This will increase transit time by 20 to 25 days. Freight costs will also rise. This comes at a critical time for fashion businesses with tight seasonal calendars. Timely deliveries of season-specific merchandise are at risk. Small Indian markets are leading physical retail spending in 2025. This growth surpasses metros and Tier 1 and 2 cities. This marks a shift from the 2023-24 trends. Aspirational demand from these micro markets is growing. Quick commerce and social media are driving this expansion. This trend highlights a decentralization of demand across India. India is preparing for potential fuel shortages. The government is exploring options like limiting fuel exports and increasing Russian crude imports. Demand management measures, including LPG rationing, are also under consideration. These steps are being taken due to ongoing disruptions in the Strait of Hormuz. India's gold loan sector is evolving rapidly and redefining the way wealth is perceived and leveraged. Historically seen as a specialty service, it is now a popular financing option for the well-to-do. The prevalence of loans over Rs 5 lakh is a clear indicator of this cultural evolution. The phenomenon is largely propelled by soaring gold prices and progressive government policies. Paramount and Warner Brothers Discovery are merging. This creates a giant media company with a combined debt of $79 billion. Their streaming services like Paramount Plus and HBO Max will unite. The move aims to challenge Netflix dominance. The deal is expected to save over $6 billion in costs. The merger will reshape the entertainment landscape. Central Board of Indirect Taxes and Customs or CBIC introduces deferred customs duty payment facility for eligible manufacturer importers as announced in Union Budget 2026-27. CBIC also notifies eligibility and guidelines for eligible manufacturer importer scheme. EMI scheme is a trust-based customs facilitation scheme to improve cash flow, promote compliance and boost domestic manufacturing and facilitate ease of doing business. EMI facility will be available from 1st April 2026 and will remain in force till 31st March 2028. Equity-backed Resolven plans to invest $1.2 billion over the next 2 years to scale up its renewable energy portfolio to 3.4 gigawatts by financial year 28, as private equity capital continues to expand its presence in India's clean power sector. Resolven, the rebranded renewable platform formerly known as Zelestra India, is fully owned by Swedish private equity firm EQT and is pursuing capacity expansion across solar, wind and energy storage. The Indian rupee fell to a one-month low amid escalating Middle East tensions, driving crude oil prices up to $82 per barrel. The domestic currency declined 50 paise or 0.55% to 91.48 against the dollar on Monday, the worst single-day fall since January 21st. The Reserve Bank of India likely stepped in through its dollar sales, traders said. They added that the RBI defended the currency at 91.48 and capped further depreciation. Indian business leaders are caught in a tense situation in the Gulf. Missile alerts and airspace closures have disrupted travel. Execs are closely monitoring embassy advisories for evacuation flights. Many are stuck in Dubai and Doha, facing disruptions to business operations. Repatriation services are slowly resuming, offering hope for a return home soon. Reserve Bank of India is scrutinizing shadow banks. Several non-banking finance companies face questions regarding their policy on lending to borrowers with existing defaults. The central bank insists on a board-approved policy to justify new loans to such customers. This move aims to prevent evergreening and ensure transparency in lending practices. Banks are asking the government for clear rules on education loans for students at foreign universities in Gift City. These courses are completed in India, but loans are treated as studies abroad. Lenders want to update the education loan scheme. This includes removing visa requirements for loan approval. The issue was discussed internally and flagged to the government. Infosys and Intel on Tuesday announced a strategic partnership aimed at helping enterprises move artificial intelligence initiatives from pilot stages to scale production deployments. The collaboration will combine Intel's high-performance and energy-efficient compute platforms with Infosys Topaz, the IT major's agentic AI services suite, to create open standards across the edge-to-cloud stack. The companies said the objective is to accelerate secure AI deployments and enable enterprises to integrate AI more deeply into core operations. Tata Consumer is positioning itself for a sharper, distribution-led growth as it goes for a sweeping revamp of its go-to-market model amid rural demand, outpacing urban and e-commerce contributing a fifth of sales. Over the past 2 years, Tata Consumer has nearly doubled its rural infrastructure by adding super stockists and sub-distributors, enabling direct reach into towns with a population below 50,000 and in some cases as low as 20,000. Indian information technology companies could be headed for a slower than expected March quarter and a muted start to financial year 27 as escalating geopolitical tensions in West Asia delay client decision making at a sensitive juncture for the sector. Direct revenue exposure to the region remains limited, with West Asia accounting for less than 2% of revenues for most large Indian IT firms. However, the region has emerged as one of the faster-growing markets outside North America and Europe, supported by digital transformation programs, public sector technology spends, and a growing presence of global capability centers. Indian businesses face uncertainty as tensions rise in West Asia. Companies with strong ties to West Asia are consulting experts. Potential disruptions to trade routes and supply chains are a major concern. This situation could impact key sectors like energy, gems, and jewelry. Businesses are reviewing contracts and contingency plans to navigate these challenges. Life insurers are sharpening their focus on annuity and pension products, betting on an aging population to drive long-term growth. The change comes with rising longevity, limited social security coverage, and growing awareness around the need for stable post-retirement income. Pension and annuity segments together consist 18.87% of the total life insurance industry as of March 2025. This segment is growing faster than the industry for most insurance companies. The escalating US-Iran conflict has disrupted global gas flows, with Qatar Energy halting production and declaring force majeure, prompting Gujarat Gas to cut industrial supply by up to 50%. Companies across the world are bracing for shortages in global gas over the next several weeks. Fino Payments Bank said in its regulatory filing that its planned conversion into a small finance bank is progressing within the central bank's 18-month timeline. The Reserve Bank of India had granted the payments bank an in-principle approval in December last year to convert into a small finance bank, a move that would allow Fino to accept larger deposits, offer loans, and credit facilities. New banking rules starting April 1st will boost liquidity coverage ratios for banks holding more wholesale deposits. Private lenders are set to benefit more as certain wholesale deposits will attract lower runoff factors. This change is expected to improve the overall liquidity coverage ratio for banks. Public sector banks may see a smaller advantage from these adjustments. Chinese financial institutions are carving out a significant foothold in global lending markets. With their ability to provide more affordable credit options, they are attracting desirable borrowers away from established international banks. This shift has been fueled by China's easing monetary policies and a decline in domestic demand. India sees a record surge in new company and LLP registrations this fiscal year. Investor confidence in India's economic growth remains strong despite global challenges. This trend is expected to continue into the next fiscal year. Government reforms and positive economic outlook are key drivers. India is poised to remain a fast-growing major economy. India's drug exports face a significant threat from the Iran war. Higher freight costs and shipping companies avoiding Gulf routes could impact shipments worth $300 to $500 million. This disruption affects both raw material imports from China and finished product exports to West Asia and beyond. Companies are building inventories to manage potential delays. The Securities and Exchange Board of India has released a set of frequently asked questions on credit rating agencies to enhance investor awareness and provide clarity on the functioning and regulation of credit rating activities in India. The FAQs aim to improve public understanding of the role and functioning of credit rating agencies, promote informed investment decisions, and strengthen transparency in the credit rating ecosystem. Rural omni-channel retail startup Rosanna has raised $31.5 million in a Series B funding round led by Bertelsmann India Investments, with participation from Fireside Ventures, US-based Spark Growth Ventures, Bikaji Family Office, FE Securities, and other family offices. The company operates a hybrid commerce model, combining a consumer-facing app with over 75 physical retail experience centers and an own distribution network across 21,000 villages in Uttar Pradesh and Haryana. Its product ranges spans FMCG, groceries, home essentials, footwear, beauty and personal care, and general merchandise. State Bank of India has been ranked the 16th strongest bank globally and the only Indian name with AAA+ rating, the highest accolade for brand strength according to the 2026 Banking 500 journal released by brand valuation consultancy Brand Finance on Thursday. The report also names HDFC Bank as the most valuable Indian banking brand, although it dropped 7 places to 31 from its 2025 ranking in the global rankings. Rising tensions in West Asia threaten India's $98.7 billion imports, including crude oil, LNG, fertilizers, diamonds, and industrial materials. Disruptions at Gulf ports and energy facilities could push up fuel and food prices, impact factories, and slow exports. A recent Indian Supreme Court ruling on tax residency may impact cross-border investments for Indian high-net-worth individuals and family offices in Dubai. The judgment concerning the Tiger Global Flipkart case suggests that tax residency certificates alone may not suffice for treaty benefits, requiring demonstrable commercial substance and effective management. Escalating Middle East conflict is expected to increase demand for essential medicines. This surge could lead to higher drug prices, potentially benefiting Indian pharmaceutical manufacturers. Companies are monitoring the situation closely. Increased demand for chronic and acute therapy drugs is anticipated. Indian firms may see export disruptions, but also higher overall demand if the conflict extends. A week into one of the biggest ever disruptions to global energy markets, oil prices still remain far below levels seen in previous crises. But a growing chorus of energy executives and traders is warning that every day that war rages on brings the world closer to a tipping point, with several predicting $100 crude within days. The Reserve Bank of India is gathering information on foreign exchange deals from banks. This move aims to understand if significant bets are being placed against the Indian rupee. The central bank is looking at client transactions and bank positions. This data will help the RBI manage currency fluctuations and make informed decisions to control volatility in the coming days. Dubai's record property boom is facing an early stress test as rising tensions involving Iran push geopolitical risk closer to the United Arab Emirates. The development comes just months after the emirate logged its strongest real estate year on record, prompting questions about whether buyer confidence can hold if regional instability persists. Residential property values in Dubai have increased between 60% and 75% since 2021, placing the city among the fastest growing housing markets globally following the pandemic recovery. The Middle East tension is impacting India beyond crude and energy supply. Indian pharma industry is also feeling the heat. The industry is staring at a loss ranging between Rs 2,500 to 5,000 crore due to the various supply and freight movement disruptions owing to the conflict in the Middle East. Freight charges for both imports and exports have increased because of the Middle East conflict. The doubling of freight charges for both imports and exports, accompanied by surcharges of $4,000 to $8,000 per shipment, has put substantial pressure on Indian pharmaceutical companies.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai